What if I told you that one single stock is quietly setting up for a move that could either explode higher or sink lower depending on a few key triggers? That stock is SoFi, and today I'm going to walk you through exactly what's going on beneath the surface. We'll cover unusual trading activity, market conditions, government uncertainty, analyst opinions, and what the upcoming earnings could mean for every single SoFi investor. Stick around, because by the end of this breakdown, you'll have a crystal clear view of what's happening and why the coming weeks may be some of the most important in SoFi's history. Now let's dive right in. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi had a volatile trading session, closing with a drop of about 2.5%. The day's range was wide, with a low near $25.64 and a high of $27.33. The real shocker wasn't just the price movement, it was the volume. Over 80 million shares traded hands, compared to the average of about 66 million. That tells us one thing: something unusual was brewing. A big chunk of this activity didn't even happen in the regular session. It was concentrated in after-hours and dark pool transactions. To put numbers on it, there were blocks of 2.5 million shares traded at $25.76, another 2.5 million, followed by a massive 12 million share transaction. These are not your everyday retail trades. These are the fingerprints of large institutions or algorithmic programs moving serious money behind the curtain. On the secondary market, there were also repeated trades in the 4 million share range, showing us again that there was heavy strategic positioning throughout the day. So why all this action? Part of it ties back to the broader market environment. Going into today, traders were bracing for the effects of the government shutdown drama. Midnight passed without a deal, yet oddly, pre-market action looked bullish, tricking some into what we now know was likely a bull trap. Markets perked up initially, but once economic data began to roll in, sentiment shifted fast. The ADP employment report was one of the key data points. Instead of the forecasted 40,000 new jobs, the report actually showed a loss of 32,000. That's ugly, plain and simple. But ironically, bad economic news often creates a silver lining. The Fed is now under more pressure to cut rates. The expectation of at least a 25 basis point cut has strengthened, and whispers of a 50-point cut are even on the table, though that's still just about a 1% probability. For anyone who's followed this channel, you know we've been anticipating exactly this type of scenario where weaker data forces the Fed's hand. On top of that, manufacturing numbers came in at 49.1, slightly beating forecasts of 49. So, mixed signals, but overall, investors saw enough to keep hope alive for rate cuts. And tomorrow, more data is on deck: challenger job cuts and weekly jobless claims. Depending on how those land, we could see more volatility spill over into SoFi and the broader market. But back to SoFi itself, because the company actually made an announcement today. They've locked in their Q3 earnings date, October 28th. Now, SoFi always reports in the morning, and while some investors might wish they did after hours, the timing is consistent with their history. Why does this matter? Because historically, SoFi stock tends to see a 2.9% climb on average between the announcement of earnings and the actual release. If history rhymes, we could see an upward drift between now and late October, though of course, past performance never guarantees the future. Another key update came from the product side. Level 1 options trading quietly rolled out on some accounts. CEO Anthony Noto had mentioned this was coming in Q3, and they delivered right at the wire. It's not a full-scale launch yet, but the fact that it's live for some users is a milestone. Many traders believe this could attract fresh interest once the rollout becomes more visible. And don't forget, crypto offerings are still on deck for Q4. If they announce or launch that before earnings, it could serve as a powerful catalyst. So what's been dragging the stock down today? Interestingly, SoFi wasn't entirely responsible for its own fall. An analyst from BTIG downgraded Upstart, citing unusually high delinquency rates. Because SoFi operates in the same sector, some investors lump them together, punishing SoFi alongside Upstart. The irony? Later in the day, that same analyst revised numbers, causing Upstart to soar. And SoFi briefly rode the momentum higher before the market downturn reeled it back in. On the short seller front, pressure increased. Short interest rose by about 32,000 shares, bringing total short interest to 110 million shares, or roughly 9.39% of the float. Even more eyebrow-raising is the negative cost to borrow, which has now appeared for 2 straight days. That's rare, and many view it as another red flag that manipulation could be at play. Options data also painted an interesting picture. There was about $64 million in call volume compared to $23 million in puts, but despite the bullish skew, nearly 40% of options trades were bearish in nature. The bullish camp is targeting prices above $27, while bears see it slipping below $25.50. Essentially, both sides are battling it out, with a slight edge in optimism but a heavy presence of caution. Technically speaking, SoFi closed at 25.76 cents, sandwiched between key support and resistance levels. Strong support sits at 25.21, while resistance targets are 26.44 cents and 27.21 cents. The stock has officially fallen below its 10-day moving average, signaling consolidation. If it breaks under the 50-day average at 24.77, things could get uglier. Not just for SoFi, but across the board, since many stocks are trading in similar technical setups. One thing to note, the stochastic RSI has fully reset, meaning the stock is technically primed for a bounce if a positive catalyst hits. Whether that's a government shutdown deal, a crypto launch, or even just more visibility around their options rollout. Now, here's the million-dollar question. Who was behind those massive after-hours transactions? Were they institutions dumping shares, or were they quietly loading the boat at lower prices? With dark pool trades, it's nearly impossible to tell. Some clues point to accumulation, while others suggest rebalancing. But regardless, this kind of activity shows us that SoFi is firmly on the radar of big money players. In the end, SoFi finds itself at a critical juncture. On one hand, shorts are pressing, algos are suppressing, and the broader market is shaky. On the other hand, catalysts like earnings, crypto expansion, and new options trading tools could ignite the stock in Q4. For investors, it's a classic setup. High risk, but potentially high reward. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.